Welcome to the Deep Dive. We're your shortcut to getting truly up to speed. Today, we are jumping into the recent earnings call from PetVivo Holdings. That's ticker PETV.
Right.
Our goal here is pretty straightforward. Cut through all the noise, pull out the really important stuff, and give you a clear, concise understanding. We'll cover their fiscal year 2025 results, what management's thinking about the future, and how the market took it all in.
And PetVivo, just for context, focuses on those biomaterial injectables mainly for joint pain in companion animals like dogs and horses.
Exactly. It's a really interesting niche within the animal health space. Lots of innovation happening.
Definitely. And seeing how a smaller company like PetVivo navigates this, especially post-earnings, can be quite telling.
For sure. So let's get right to the numbers. Fiscal year 2025 ended March 31st. What were the headlines?
Okay, so reported revenue came in at $1.1 million.
Which is up, right?
Yeah, up 17% year over year. Solid growth. The net loss was $8 million, or 0.39 per share. But importantly, that's actually an improvement, about 27% better than the previous fiscal year.
Okay, so loss narrowing, revenue growing. What about margins?
Margins stayed strong. Gross margin was reported at 87.8%. Pretty robust.
So decent numbers on the surface.
Yeah.
But how did the market react? Because that's often the real story.
Yeah, that's where it gets interesting. Despite those numbers, the stock actually dropped. It slid about 8.5% after the call.
Really? On higher volume, too?
Yep, higher than average volume. Seems investors were, underwhelmed. They saw it as maybe just meeting expectations, nothing spectacular. And you have to remember, this is a microcap stock. Very small company, not much Wall Street coverage.
So the reaction might be more pronounced?
Could be. And it looked very company specific. Other vet device stocks were basically flat or slightly up that day, so it wasn't a sector thing.
Okay, that is a curious disconnect. Progress reported, but the market yawns or even frowns. We need to unpack that. What was driving that 17% revenue growth specifically?
Good question. It was mostly down to their expanding distributor network across the U.S. Sales through those distributors jumped 31%, hitting about $958,000.
Wow, so that's like 86% of their total revenue coming through partners.
Exactly. Shows that strategy is working, at least in terms of reach.
Okay. And on the flip side, costs. You mentioned the net loss improved. How?
They made some pretty significant cuts to operating expenses, down 21% overall to $9.1 million from $11.5 million the year before. And this wasn't just trimming fat randomly. It was part of a deliberate company-wide cost reduction plan.
Like what specifically?
G&A expenses were down 28%, and sales and marketing costs fell 23%. Pretty substantial savings there.
Were those savings just dropped to the bottom line or reinvested somewhere else? Like R&D?
Some were reinvested. While they cut operating costs, R&D spending actually went up by 13%. That extra spending was mostly for new clinical trials for their main product, Spring.
So tightening the belt operationally, but still betting on the future pipeline. That makes sense.
It's that classic balancing act, right? Cut costs, but don't kill innovation.
What did this do for their cash situation? Did the savings help there?
Yeah, definitely. Net cash used in operating activities dropped by 40%. That's a saving of about $2.9 million compared to the year before.
And their cash on hand at year end?
It was $227,689, which sounds low, but it was actually up quite a bit from just $87,043 the previous year end. Total assets also saw a big jump to $9.3 million from $3.1 million.
Okay, moving in the right direction. But $227K, that doesn't sound like a huge runway. Did they raise money after the fiscal year closed?
They did, and this is really crucial. Starting April 1st, right after the fiscal year ended, they closed a Series B financing round. It was a $5 million convertible preferred stock offering, and they netted about $4.7 million from it, fully funded by late June.
Okay. That changes the picture considerably.
Absolutely. It boosts their current cash balance to around $3.3 million, and they've earmarked that specifically for commercialization efforts, pushing Spring out there.
Got it. Now, there was something about these results being preliminary.
Yes, good point. These are preliminary, unaudited numbers. The company filed for an extension on their official 10K annual report. They said it's to give auditors more time, particularly to review the accounting for derivatives. That can get complex.
So the final numbers could shift slightly.
Potentially, yeah. They expect to file the final 10K very soon, though, within the next week or so.
Okay, so that extra capital definitely helps fuel their plans. Let's talk about those plans. Beyond the numbers, what's the strategy? Where are they pushing?
Right, the strategic initiatives. They've been quite active. Spring, their main product, is now in over 10,000 vet clinics across all 50 states.
That's broad reach. Any expansion beyond the U.S.?
Yes, they recently expanded into Mexico. They see it as a pretty attractive market. Projected growth there is decent, around 6% CAGR, hitting nearly $2 billion by 2026. Plus, a strong horse market there too.
Makes sense. What about their sales team? Any changes there?
Big changes. They did a full realignment and expansion, brought in new territory managers, sales reps, technical service vets, people with a lot of experience. The idea seems to be shifting more focus towards the companion animal market, dogs and cats, which is growing fast, while still holding on to their gains in the equine space.
And leadership, did they bring in new talent at the top?
They did, some significant hires. Mike Eldred came on as commercial and operations advisor. He's got 30 plus years in animal health, built Decker Pharma's North American business up to $450 million.
Wow, okay. That's serious experience.
Yeah. And April Boyce, as VP of Sales and Marketing, she has over 25 years at big consumer companies like P&G and Clorox. Plus Brian Monager as VP of Distributor Relations, with deep experience from Hell's Pet Nutrition and others, bolstering the commercial teams significantly.
Seems like they're gearing up for a bigger push.
Right.
What about distribution partners? Adding more muscle there?
Yep. Added Vedco and Clipper distributing to their network. Those two alone brought in over $483,000 in sales in just the last 4 months of the fiscal year.
And these aren't small players.
No, they're key distributors feeding into the major national ones like MWI, Covitrus, Patterson. It really broadens their access.
Okay, so strengthening the team, widening the reach for spring. What about new products or potentially game-changing partnerships?
This is where it gets really interesting, I think. They signed an exclusive deal with VetStem for something called Precise PRP.
PRP, platelet-rich plasma.
Exactly. But this is an allogeneic version for horses and dogs. That means it's off the shelf, ready to use, doesn't require spinning down the animal's own blood.
Convenience factor.
Big convenience factor. And they highlighted it's the only animal cell tissue product approved for safety by the FDA Center of Veterinary Medicine.
Okay, that's notable. Anything else on the partnership front?
Yes, another potentially huge one, a strategic partnership with a company called Piso Biomembrane. They're working together on R&D for biomaterials aimed at regenerating or remodeling damaged tissue and bone, both in animals and humans.
Humans? So they're looking beyond animal health.
It seems so. Management specifically mentioned the potential for the human osteoarthritis market. Joint replacements. That's an $11 billion market in the U.S. alone, $33 billion globally. Huge potential upside if that pans out.
That is a potential leap. Wow. Any other high-tech stuff? I thought I saw something about AI.
You did. They announced what they called a groundbreaking, if not transformative, strategic alliance with Digital Landia. It's for their pet AI technology. The claim is it can decipher animal behavior and communication barks, body language, physiological signals using a smartphone camera.
Seriously? With what kind of accuracy?
They're claiming 97% accuracy. The idea is to build this whole pet care ecosystem around it.
How would that benefit PetVivo directly?
The thinking seems to be unparalleled brand visibility, maybe integrating Spring or other treatments into this ecosystem, making it part of daily pet care interaction guided by the AI.
It's ambitious. Understatement. Is this real or just concept?
They said initial beta testing is underway, so it's moving forward, but likely still early stages.
Okay, so Precise PRP, the Piso partnership looking toward humans, and this pet AI venture. Lots of potential future drivers.
Yeah.
What about validating Spring itself?
They're continuing that too. Exhibited at 7 major vet conferences last year, getting the word out, gathering feedback, and they're running more studies, like a new canine elbow study with orthobiologic innovations, expecting results by the end of this calendar year.
And didn't they mention someone on their advisory board getting a prominent position?
Yeah, Tracy Turner, who's on their advisory board, is now the president of the American Association of Equine Practitioners. That certainly helps with visibility and credibility in the horse world.
Any other high-profile validation?
One more interesting one. They partnered with Commonwealth Markets. That's the ownership group behind some big-name racehorses, including Kentucky Derby winner Mage.
Oh, wow.
Yeah, so they're integrating Spring and the Precise PRP into the care protocols for their thoroughbreds, using it for prevention and treatment. That's pretty high-level validation in the equine sports world.
Okay, so pulling all these threads together, the cost cuts, the new funding, the sales expansion, these new partnerships, what's management's outlook for this fiscal year 2026?
They're sticking to their guns. reiterated their confidence and maintained their full-year revenue growth guidance of 50 to 100%.
50 to 100% growth? That's a big range, but still aggressive.
Very aggressive. They believe the sales momentum is strong, market penetration is increasing, and they point to the overall U.S. animal health market just booming, projected to double to over $11 billion by 2030. They see strong tailwinds.
That kind of growth projection really makes you think about the bigger picture here, doesn't it?
It absolutely does. And this ties into broader trends we're seeing everywhere.
Like pets being treated as family members.
Exactly. That plus pets are living longer, leading to more age-related issues like arthritis. At the same time, veterinary science is advancing rapidly. You add in rising pet insurance use, better diagnostics, more treatment options. It all fuels demand for specialized care. Things like sports medicine, rehab, pain management, right in PetVivo's wheelhouse.
So the market backdrop is definitely favorable. Did anything else useful come out of the Q&A session on the call?
A couple of things. Someone asked about dilution from that Series B financing we mentioned.
Right, the $4.7 million they raised.
Management clarified it converts 1-to-1, so potentially 5 million new shares down the road, but they stressed they sold it at a premium $1 per share when the stock was trading around 55 cents.
So they framed it as a good deal in tough market conditions.
Pretty much, yeah. Viewed it positively. There was also a question about what vets actually charge pet owners for Spring.
Good question. What's the cost to the end user?
Typically around $800 per joint for a dog, but it varies, maybe $500 to $1,200 depending on the vet's location and specialty.
How does that compare to competitors?
They compared it favorably to something like Librela, which is a monthly injection costing maybe $150 a month ongoing for the life of the pet. So Spring could look more cost-effective over the long haul.
Okay. And any more on the human potential with that peso partnership?
Just confirmation that the early animal studies, small and large animals, showed positive results. That's what's giving them confidence it might translate well to the human osteoarthritis market. Again, huge potential if it works.
All right, let's move into our next segment. And just a reminder for everyone listening, this is purely for informational purposes. It is absolutely not financial advice. Always do your own research and consult with a qualified professional before making any investment decisions. Okay, disclaimer delivered. Now, for an outrageous but plausible trade idea based on everything we've just heard, considering that market shrug, that underwhelming reaction to what seems like a pretty busy quarter strategically, one could argue there's a disconnect.
Right. The market focus may be on the current numbers, the cash burn.
Exactly. But if you look past that, you see the new financing shoring things up, that aggressive 50-100% revenue guidance they reiterated, plus these potentially transformative partnerships. The pet AI, the PETV human application angle.
The long-term story.
The long-term story. So the thesis here could be, maybe the market is missing the bigger picture. You could consider a long position, betting that PetVivo's innovation and execution in this booming pet health market will eventually win out. Look past the microcap growing pains for potentially exponential future value if they deliver on these big promises.
A bet on the narrative and execution versus the current financials.
Precisely. It's definitely looking further down the road. So let's quickly recap the key takeaways from this deep dive. PetVivo showed solid full-year revenue growth, significant cost reductions.
Which improved their bottom line and cash burn situation.
Right. And strategically, they've expanded distribution, beefed up leadership, and launched these potentially game-changing partnerships in AI and regenerative medicine, even eyeing the human market.
All happening within that very strong, growing animal health market context.
It really does paint a complex picture.
It does. And the final thought to leave you with is this. How do you weigh these factors for a company like this, a thinly traded microcap? How much importance do you give the near-term realities, the cash burn, the fact the results are still unaudited, versus that very compelling but potentially distant long-term story, especially when that story involves things like pet AI and human clinical applications, which could be massive or could fizzle out. It's a classic risk-reward calculation.
A really important question for anyone looking at this space. And just to reiterate the company's own caution from the call, remember that forward-looking statements involve risks and uncertainties. Actual results could differ. Check their SEC filings for the full picture on risks. We'd love to hear your thoughts on this. What questions do you have? Let us know. It might shape a future deep dive. Thanks for tuning in.